Welcome to the Money Pig Podcast, presented by Goodwin Investment Advisory, where our mission is to lead you to financial pig, peace, independence, and generosity. I'm your host, Tim Goodwin. All right, welcome back to the Money Pig Podcast. Today, I am super excited to have the one, the only, Jamie Howell Quinn. How you doing, Jamie?
I'm doing good.
Awesome. We are super excited to have you here. Let me just read this quick bio I have about you. Jamie is a CPA. That stands for Certified Public Accountant, everybody. And it says leads North Georgia CPA Services, but did you found it?
I did.
You're the founder. When did you found
2011.
it? 2011. Okay, awesome. With precision and heart, a Kennesaw State grad and lifelong Cherokee County resident. There's not a lot of you left, Jamie.
There's not.
Jamie is known for her integrity, service, and genuine care for her clients. Named one of Cherokee's top 10 young professionals, she believes real success is built on relationships, not just numbers. Welcome to the pod, Jamie.
Thank you for having me.
So when I read this bio earlier, I was not aware about the top 10 young professionals, but I was also not surprised either. We have known each other for a very long time.
Yes.
Full disclosure, listeners, Jamie is my personal tax preparer and CPA as well.
Say a prayer for me.
Yeah, whether she likes it or not. So she's
very organized, but lots of stuff.
Lots of stuff.
Yes.
Yeah. How do you have lots of stuff? You gotta be organized.
Right.
So, but I like this last part too. You talk about relationships, not just numbers, because I read your monthly email that you send, and you always kind of start that at the top. You know, you're not a number, you're family, and you really prioritize family. That more than that numbers feel, that transactional feel, but building relationships with clients over a long time, which I think is super special and cool about you. So before we jump into some of the dialogue today, maybe share with the audience something that they don't know about you.
Two things. One, I started taking piano lessons.
Recently?
Yeah, about a year and a half ago.
Really?
So I'm trying to learn to play the piano. I had started a little when I was a little kid, and I didn't go anywhere. My siblings did. So I started trying to learn how to play piano. And the second thing that I wasn't sure if I wanted to share, but I will share because I think it's very sweet. So I am not a drinker. You know, of course, I have bad days during tax season, and I'm just like, I'm having a drink tonight. Like, this is awful. But then a week will go by, and I'm like, I forgot to have that drink because I don't drink. Okay, well, me and my daddy, though, drink whiskey together.
What?
Yeah. So me and my daddy started drinking whiskey together.
What kind? Just
different kind. Well, like Crown Royals, where we're at right now. We're trying blackberry, and we've done peach, and then the normal. And then when me and my husband went to Scotland last November, I brought back some scotch from there.
Look at you just growing and opening your horizons.
I know, but with my daddy.
Now, speaking of your daddy, he's got a nickname for you.
Yes, Horsefly.
Now it calls you Horsefly.
That was when I was little. We had horses. The family all had horses, so we would ride horses on the family property because I live on family property. And my hair being in a ponytail, it would swish back and forth. And on a horse, their tail is always swishing to knock the horseflies off.
Okay.
And so he nicknamed me Horsefly.
Okay.
Because my ponytail would swish back and forth.
Like the horse.
Yes, okay. Like the horse. So that was.
And are there like nieces and nephews that call you this now?
Yes, they can. They do sometimes, but my dad has given nicknames to my nieces and nephews too. And it's like one of them is Peanut, and it had to do with peanuts at one time. One of them is Tater, because Daddy would have a tater patch, and he would go harvest the taters, and she was little, and she would go to the basket and just be eating dirty taters. So potatoes, but we call them taters. So Tater, there's one called Firecracker. You know, there's just different nicknames that my dad's given my nieces and nephews, his grandchildren.
So random for those that are listening that ever watched the Blue Collar Comedy Tour.
Yeah,
and Ron White talks about being pulled over by cops and asked if he has an AKA named Tater.
That is true.
You remember?
That is true.
That is true. The word Tater
and now my cousin, because again we live on family property, she has goats, and one of them's name's Tater.
Oh, so, that's fantastic.
Yeah,
that's so cool.
Yeah.
My wife and I like to drink whiskey as well. Maureen is a little more of a Woodford Reserve, and I'm a little bit more
have some of that.
an Angel's Envy kind of guy.
I've never had that.
Yeah.
And I don't know anything about whiskey.
You and Pappy needed to
I don't pretend I know anything about it. It's just me and Daddy will have little shots. And when I say shots, mine are like that. And Daddy's are like that.
Like half a shot.
Yeah, like little bitty bit. I know. And I'm like, oh my God, I feel that. I need some water in the faces that I make. I try so bad. I had some Saturday. We actually had some, and I was like, oh my God, it's going down and no face. But no, then it comes. I'm like going, I'm doing that when my face is, my daddy just laughs at me because he's over there just like,
yeah,
no face whatsoever.
Moderating, yeah. It's like he's trained. So I love that the big first part of this podcast has been about whiskey. So we've been thinking about doing a whiskey tasting event for clients. So
invite me and my dad.
We'll have to have you and your dad come and teach us your ways. So,
yes.
Jamie, did you hear about the ATM that was addicted to money?
Oh Lord,
it was having withdrawals.
You're such a dork.
So bad.
Love it.
So bad. Yes.
Bless your daughters.
Dad joke. Dork right here. Okay, let's get to the content because I know that's why everybody's here. And so you and I have worked together for years, not just, you helping me with my personal stuff, but we've recommended clients here that ask, hey, do you guys know any good CPAs in town? And so a lot of times, there was a time where you were not accepting actually new clients for a little time. So we do have some other partners, but we love sending folks your way. And that's reciprocal in nature. But I guess maybe you could unpack this advisor, the CFP CPA relationship. Why does that matter for clients? And
even if I can put specific scenarios to that is, for instance, I've got a client that I do not have any relation with her financial advisor. And I'm doing her tax return. She has $100,000 of capital gains on her tax return.
Right.
And so when I finished the return, and she hadn't told me anything about it, just did the return.
Not when she realized the gain, which would have been nice for you to know. Yeah.
So she had taxes owed of $15,000 just on federal. And she's like, why do I owe that? I'm like, well, you had $100,000 gain. And she's like, well, no one told me. And I'm like, your advisor did not tell you that you would be taxed on that? And her whole, and rightfully so for her, she didn't understand why she was taxed because she didn't get the money.
Right.
It was reinvested.
They just sold it.
Right. And she's like, but I didn't get the money. It's reinvested. And I said, yes, but you're still taxed on it. So it's just like when it falls to me to have to explain that when her advisor should have. I don't ever have that with any of my GIA clients.
Go ahead now.
I don't have any of that with y'all.
Sound effect thing? Yeah. That's good.
I mean, I don't have that because y'all explain it to them. And that's where it is important for me and the advisor to have some type of contact or some type of relationship to where also the other part of it is like me as the CPA coming to, if they go to a new advisor, I know about carryover losses, so I know there's some carryover losses. So it helps that the advisor knows, hey, there's some carryover losses. So y'all can harvest some gains to put against it or vice versa. So to me, it's very important, very helpful on my end. And I hope on the advisor's end to have a relationship or a dialogue at least of what's going on with our client.
That is a very bad experience for a client.
Yes.
Right? When they're filing their tax return, they're trying to get it all done. Usually excited about maybe there's a little refund coming or something, and all of a sudden the CPA is like, "No, you owe $15,000 for federal,"
and then it falls on me like it's my fault.
You're the messenger of really bad news.
Exactly, and
that's
I'm like,
great example. And so, but we realized we got to get ahead of that. And so, one, the client needs to understand when we do that, why we do that. And I will admit that, for our clients here, if we're only going to realize a capital gain that's going to generate a couple $100 in taxes, we're not going to bother you. We're not going to bother us about it. Nobody needs to, waste time talking about that. But when it gets over a couple $1,000 threshold that we have, then our advisors actually have to reach out and talk to the client before we make the trade. Why would we be willing to realize this gain and create taxes? Because that's certain.
Exactly.
You realize this gain, you're going to pay the taxes.
Exactly.
The maybe better investment I put you in, I only hope it does better than what I'm selling. But that's not the only reason. Sometimes it's a moderately aggressive investor, and over the course of a couple of years, the equities, which typically happen, outperform the fixed income. And so when they started and they said, Tim, I'm a moderately aggressive investor, I want to be 80% stocks and 20% fixed income. Well, a couple of years later, it could be 90% stocks and 10% fixed income because the equity has grown. So I need to bring them back. We would do that much sooner. This is just kind of an example here. We need to kind of reset them to realize the equities and shift back to fixed income so that we reduce the risk. And when the market tanks, they're not feeling it as much because they're a moderately aggressive investor, not an aggressive one. So it's not always that we're realizing the capital gain to maybe put them in a better investment, quote unquote, my air quotes for those of you not watching that are listening. It may be to help control the risk of the portfolio. Or maybe it's to get somebody in, hey, there's another investment that well, it's cheaper, right? So those are things that we're considering. So we will actually talk to the client about it. But when we realize that gain, especially if we know that it's a substantial gain, whether that client's used to it or not, we usually put in writing, here's the gain that was realized. But I've learned over time that my clients will forget to tell their CPA.
Yes.
And so there hurts something.
Yes, but I would even go a step further, knowing you the way I know you and I know your team, is that I can just about guarantee that you also go the step further to say, okay, you're going to have this gain. You've got this gain.
Right.
You're going to have these taxes. So where's the money coming from to pay those taxes?
That's right.
And so you're like, either it comes more from the retirement funds that are coming out, or, you know, we do sell these assets. You have this gain. You're going to pay these taxes. We're going to reinvest this amount, but this is going to come out and go in your savings account to pay taxes.
Absolutely.
I would just about bet you do that with your clients.
We're like, all right,
but some don't.
Just like you said, do we set the taxes aside in the savings account?
Yep.
Do you want to leave it invested just knowing that we're going to have to make a withdrawal come March, come April?
Or you're pulling it from savings.
Exactly.
Some other,
and if we're pulling it from your IRA, there could be more taxable income. So yes, we're making
there's
that
no
part of the plan.
surprises.
Yeah. And you want to get ahead of it, right?
Yes.
And so you're not making your CPA be the messenger of bad news. Well, also, I'll just skip ahead. So what I usually do would find out, okay, they work with Jamie. I'm going to let Jamie or Jamie's team member know. Or if it's a different CPA, I would get their contact information and just copy them on this. Hey, we just realized this gain for this client, for Jamie. And if it realizes a capital gain, we want you to let you know. And if an estimated payment needs to be made, we want to help to facilitate that because that's the other part. It's not just, you owe $15,000 in taxes.
Yes.
If you were supposed to make a quarterly estimated payment, there's penalties on not paying it on time.
Yes, because we're a pay-as-you-go tax system.
Yes. So that's the other reason that we're more motivated. Not only would that client find out, I owe taxes I didn't know. I have a penalty now because I didn't make an estimated payment earlier.
Yes.
So that's part of why you and I working together, or our teams working together, makes such an impact.
Yes.
Is there something else like on the planning side that you feel like is helpful with CPAs and CFPs working together for the same client?
Yes, because like right now for me, especially now, but also earlier in the year, we're doing tax planning. So right now, I just got through all my deadlines and I weekly. Why did I go into a career that's full of deadlines?
You have a lot of the same deadlines over and over again. It's like Groundhog's Year for you.
I know, but I'm very thankful and very blessed, and I guess it's, job security. But but I'm going through tax planning. Right now we're doing all of our businesses, and so where they at year to date, and do they need to buy assets and do this? With my individuals, that we're doing tax planning for, it helps when I'm getting 1099 statements, or not 1099 statements. I'm sorry, they come the first of the year, but getting quarterly statements from you all that's showing what their gains are in interest dividends or capital gains. And it helps me with doing their projections, or even like, you guys are also doing retirement investments, annuities and whatnot that are coming out. My clients have RMDs. I have a lot of older clients that are getting into the RMD age. And I have usually 1 to 2 a year that didn't take their RMD. Because their advisor did not tell them.
Remind the audience, Jamie, what the penalty is for not taking your RMD.
Well, thankfully, there is a form I can file to try to get out of it. But there's 10% penalty on the amount that you should have taken out. Then you get penalized for the earnings that it continued to earn when you didn't take it out.
Yeah, I thought it was 50. Isn't it 50%?
Well, if you take it out by the due date, you can 10. But and that there's a 53. I think it's a 5,000 series form that you can file and put in why you forgot.
Right.
And usually you can get out of it because they're not wanting to. You just going to do that thing.
Yeah, because by pulling it out generates the income tax on this tax deferred asset. Exactly. But we are like Nazis around here trying to make sure that who's subject to RMD, who's new, and what did they do last year. So we literally have it on one of our members on our ops team. It's a score on her scorecard that she has to report every week. How many RMDs do we have to do, and how many have you had conversations with? How many have been processed? Because if we don't do that, it's December and it's just hysterical.
And I would say some of it is the clients don't have an advisor, so they're doing it themselves. So some of it is that, and they just don't know. But some of it is they have an advisor, and they're just not keeping up with their age. And I'm like, where's your RMD? Did you take your RMD?
It's like a major part of somebody's job on our team. It's the RMDs.
Where's your 1099R? Because you're 74, 73. Yeah.
And speaking of RMDs, like it's gotten more complicated too. Because it used to be, you're older than 70 and a half, so you're subject to the RMD. Now it is all over the place. It depends on when you were born. It depends on if it's yours or if it was inherited. It depends if the if you inherit it after they had started their RMDs or before, like
Yes.
it is crazy. We have a crazy mind map that we have to go through to know what to do, work with Fidelity, the custodian. And then the client themselves has options. They can either take it all out and just reinvest it in a taxable account.
True.
They can spend it.
Yep.
We can do some things around generosity. They can do any mix of those things. So
that's another piece too that I really like is I have my older clients taking out their RMDs that they can put that money to charity. So I love the I don't know what.
QCD.
Yes, I love
Qualified charitable distribution.
Yes, and I love that. I believe Fidelity is one of them, and I don't remember the name of it because there's several ones where they could actually put more money in that plan, and then they don't have to distribute it to the charities until later.
Okay, so that's the DAF, the Donor Advised Fund that you're thinking about. There was, I think, a short period of time during COVID where you could QCD, qualifiable charitable, into a DAF, but normally you can't.
Yes, but I still like that anyway, even for my ones that are. So I like the QCD for those that are taking RMDs.
That's right.
But I also like the Donor Advised for those that aren't in QCD, or they are in QCD, but they're putting more money in there too because they have a lot of income. You know, and so they have that ability to do that. So that's another one that I like.
If you've listened from the beginning for the Money Pay, we might apologize for how often I talk about a donor advised fund. But if you're just listening to me and Jamie, we are big fans of the donor advised fund and funding that with an appreciated security. It's got to be a year and a day old to be long term.
Long term.
And then funding that means that less money goes to Uncle Sam and more money goes to the kingdom or your alma mater or your favorite animal shelter, because when they sell the security, they're a tax exempt organization and they don't have to pay taxes on it. So we're constantly looking at our clients' plans going, why are you giving cash? I'm like, what's what I normally do? I make this money and I take 10% or whatever it is and I write it to my church or my whatever nonprofit that resonates with me. Or like, but you have this huge basket of appreciated securities over here. Why don't you give the appreciated security? That lets them sell it and benefit from it tax-free. And then you could actually just repurchase that security with the cash you would normally give to reset your basis and to reestablish your position. So we talk through strategies like that.
So I could go on and on with even more things. I mean, there's just so many things that helps when a CPA and an advisor has a relationship with that, have that client and have that relationship. There's just many things. Because even inherited IRAs, like you mentioned a minute ago, when people, their family pass away and they inherit, they, depending on where the age of the person who passed, they have rules on when they have to take that money out. And so it helps for me because, that's not something that because I'm on the taxability of it. How are you taxed on that retirement plan? Not necessarily keeping up in my head, what are the rules depending on if it's Roth, this. That's more of an advisor thing, I
think that gets to kind of my next question was kind of the difference between the tax prep to do the return and the tax planning and strategy side of things. Like you said, there's a lot of rules that change. Funding Roth versus traditional, having distributions from Roth versus traditional, first taxable, are all things that we try to help in that strategy, right? I think a lot of times CPAs, I mean, you guys are in need. Y'all are in short supply. You guys have a lot of demand. I know even you guys, as you should, as we do, are a little more intentional about filtering and vetting clients before they come in because the demand for services from a qualified, experienced, fantastic CPA are very high. Your services are in high demand, right? And so when you're sitting there just trying to crank out these returns, it's when the clients have this expectation of, well, give me all this strategy and this advice to make us better next year. I mean, they can, but they're going to have to meet with you at a different time of year.
Exactly.
Because you're in there cranking out the returns and working 24/7 just about to get it done. And that's where we try to step in way ahead and help with the tax strategy. As a certified financial planner, we are well educated and tested and licensed to help on the strategy side of taxes, but we're not going to prepare the tax return. And I think that's where it really comes together very, very well. All right. So let's move on to a little bit like of a takeaway for somebody listening or watching. Hey guys that are watching, let's say they're listening. Okay, and great. I don't use Jamie yet. Maybe I do one day. But what are some ways, some practical things that folks can do to make the tax prep, tax return season a little less stressful for them and for you on the receiving end?
First things first, if you're a current client of ours, the middle of January, we send out organizers. Okay, so those organizers, the first part's going to be a lot of questionnaires that, yes, if you can't sleep at night, read them and you'll fall asleep very easily. But it helps.
Pretty long, those organizers.
I don't know, they're so long. But it gives us a lot of stuff to where if they've got a yes on something, I'm like, I need to, that probes me to ask them another question, So the organizers help also, if you're a current client and you're getting the organizer, it has your prior year information. So it's going to have, you had a W-2 from whomever, and here's the amount. You had a 1099 from whomever, here's the amount you had last year. So it's going to help them. Oh, I had this last year, I should have it this year. So one is using that organizer, and the clients that are not current clients, they're not getting a prepared organizer because it won't have prior year data because they weren't a client in a prior year, but we can still do organizers that will help them gather their information. That's for one. For two is like, I'm very OCD type A, imagine that. But
you're getting a good profession with that. Yeah.
So I have a folder every year, start a folder at the first of the year in January, and like this January's coming up, 2026 on it. And then if there's anything that you think is tax related, put it in that folder. You know, for me, the way I work, I would rather you give me the information and me not need it than me need it and not have it. So, you know, a big thing is like, put it in there. If there's something, and then of course, for sure, January and February comes around of 2026, you're going to be getting all kinds of 2025 tax datas, or tax forms.
Just stick them all in there.
Stick them in that folder. Put them in that folder. Even if you're not sure on it, put it in that folder, and that can maybe lessen the stress. Because for me, it's just taxes. That's what I do. I can do it in my sleep to some degree. It doesn't stress me out per se. But I do have clients that they are literally so stressed when they come in for a meeting with me because they're just so worried about it. And it's just because it's just not what they do, you know. And I try to calm them by saying, listen, I understand you're stressed about this. I understand your nerves and your anxieties up about this. But let's keep in mind that this is something that I do all the time. So let me try to lessen that and take that off of you. Let me worry about it for you. You just put everything together for me, give it to me, and I'll explain it to you in the best way that I can as to how these pieces work together. And I try to also tell them, because a lot of them will get embarrassed a little bit that they're so stressed about it.
You feel a little guilty, a little shame.
And I'm like, listen, you're stressed about this topic. I'm not, because it's what I do. But I can just about guarantee you there's something that you do that stresses me out. That I have anxiety about. There's things that you do I can't do. And that's how, we all have different strengths and weaknesses.
That's how this partnership works.
Yeah, so let's try to work with each other. There's things that you can say to me or help me with that calms me down about other things in my life that's not taxes. So let's try to work off of that. Let's not put yourself down that you're getting so stressed about this and you just couldn't sleep last night because you were coming into me to see taxes. I don't want you to feel that way.
Yeah.
Let's try to work on that. But back to your original question, like if just using the organizer, using questionnaires. I know GIA does questionnaires. Doing questionnaires to help them gather their information.
Right.
That can lessen it because then you don't feel like you're missing things.
Yeah. And I realize there's a long list of questions, but there's usually very little that has changed that I, like you said, answered yes to. But you've got to be reminded that if these things happen over the past 12 months, they can affect your tax return. And your CPA can't sit there in person and ask you all 50 questions every time. Yeah. So one of the things you said is one of the things that I try to do. So when I start getting those, end of the year tax documents, some of them are mailed to me, right? And some of them are emailed. Some I got to log in somewhere and get them. And so what I'll do is I'll just create it's like a Google, a Google Drive folder. And instead of like having these piles all over the place or where to go, as soon as I open it, I just snap that picture, stick it in that folder. And if I got an email and it says, hey, it's available, log in and get it, I log in and get it. I stick it in that folder.
Yeah, virtual folder.
So then I'm not later trying to go, did I get it? Is it in my email? Do I have to log in? Did I open it? Is it in a stack somewhere? As soon as I open it, I take a picture and then I toss it. It just lets me know I did it.
Yes.
All right. So as we wrap up here, is there anything else that you would like to share? Any piece of wisdom or best practice?
I'm still trying to figure that out myself.
We're always learning.
Balance life and work and everything. I mean, work's my baby. Like I guess there's a control piece in that. Add that to my type A OCD. Like 2 + 2 is always going to equal 4. There's no ands, ifs, or buts about it. So I love that of math and accounting. Like I knew I wanted to be a CPA when I was in high school, which that sounds so weird. I had no family that were CPAs or accountants. That's what I wanted to do.
It's awesome.
And it's just numbers have always been my thing. Now I fall short daily and there's more that I can learn and more to learn and I hope to learn. But really it's just, I guess the biggest piece of advice I'm trying to work on and give myself is grace.
That's good.
Give yourself grace. I'm thankful the good Lord hands out grace every day. But giving it to yourself seems to be a lot harder. And I'm trying to work on that,
That's so cool. This year I've really, we kind of do this gratitude part at the end, but I think we're just jumping right into it. one of the things this year I'm trying to challenge myself is to find other things to be generous with. So like being generous with your time and your money, that's what people usually think about. Be more generous with your time and your money. I was like, what else can you be generous with? You can be generous with forgiveness.
Yep.
You can be generous with encouraging other people, but generous with grace to yourself.
Yeah, grace to yourself.
I have not thought about that before. That's
and it's
cool.
hard. Like, I mean, I'm not good at it by no means, because I tend to hold myself to a higher standard than I do everyone else. And my husband says a lot of times, he's like, you're just so hard on yourself about things. And I am. And I just, try to pray about it and ask the Lord to give me peace, and he does.
That's awesome.
But I just, pick things back up. You're supposed to take to him and lay it down, whatever's going on, your burdens or whatnot. And I do, but then I turn around and pick them up because I'm like, I don't want to bother you with that. So I'm sure he just looks down at times and goes, child,
just leave it there.
I'll see you again tomorrow night. Kind of thing. But grace, give grace to others, but give grace to yourself. We're all trying to do the best we can.
That's awesome. Well, I really, really appreciate that very much. And if any of the listeners here appreciated this episode just purely from getting to listen to Jamie's wonderful Southern Belle voice, and you would love to leave a review on the Money Pig, we would be so grateful. But Jamie, thanks so much for coming and sharing your wisdom with us. And listeners, thank you guys so much. We'll talk to you next time. Bye-bye.
Thank you for tuning in to the Money Pig podcast. We hope you enjoyed today's episode. To stay updated on new episodes, be sure to subscribe wherever you listen to podcasts. If you found value in today's discussion, we'd greatly appreciate it if you could leave a rating and review. If you have any questions about the topics we covered, feel free to visit us at goodwininvestment.com and reach out. This episode is produced by evamps.net. This podcast is provided for informational purposes only and should not be considered as investment advice, a solicitation to buy or sell any financial products, securities, digital assets, or other investment vehicles, nor as a basis for making any financial decisions. Goodwin Investment Advisory is a registered investment advisor with the SEC, CRD number 131193. Please note that the host and or guests may personally own securities, digital assets, or other investments mentioned in this podcast. Investments carry risk and are not guaranteed unless stated otherwise. We strongly recommend consulting with a qualified financial advisor, tax professional, insurance professional, and or legal professional before implementing any strategies discussed in this episode. Lastly, past performance is not indicative of future results.